Hey, what's up, family? My name is Brehon, and I would like to welcome you guys back to the channel where we love to focus on our personal and financial development. Now, this presentation is all about dividends, why you should have dividend stocks as a part of your portfolio. Now, before I get started, I would like to give you a word out of one of my favorite books, How to Think Like a Millionaire. It's a very short read, and I think everyone should have this book in their library. And here we go. We are born with two fears: falling and loud noises. All other fears are acquired. Unfortunately, the fear of failure is powerful and widespread, and it is paralyzing. Often deeply embedded within us, it results from past failures, from the lack of confidence bred unknowingly by our parents, and it's enforced by society's general negative, short-sighted thinking. Oftentimes, we don't accomplish the things that we are gifted or we are here to accomplish because of fear. And so, family, we have to push past that fear, set those goals, and every day chip away doing the little things that help us ultimately reach what we are trying to accomplish in life. All right. Now, we all have some type of fear. But ultimately, if there is something that you wish to do, if there is something that you dream of doing, man, step out, push past the fear, and let's go after those dreams, okay? Now, dividends. Dividends are, I think, essential. I think everyone should own dividends as a part of their portfolio. It is a great way to build additional wealth. And I'm going to show you how I invest in some of my dividend plays here. Well, actually, it's only one dividend play, which is my company stock. Okay. Now, what is dividends? So here's the definition outline of the dividend process. Investor purchase one or more shares in a dividend-paying company. The company evaluates the performance at the end of the quarter. The company may declare and announce a dividend payment. Company announce the dividend amount and dividend dates. Investor is paid the stated dividend for each share they own. So basically, when a company announces that it is paying a dividend, it is basically saying that they are sharing their profits with you. That's simply it. They're going to take a number and they're going to announce how much the percentage they're going to pay, and they're going to pay that out in a dividend. And normally dividends are paid quarterly. All right. And so, all right. So this chart here is, if you've been following my channel, I love to talk about index funds, and I love to talk about having a portion of your money set aside for dividend plays. And so here is just a small snapshot of my portfolio. It says charting your investments. And so here it has my the amount that I have in a dividend stock, which is my company stock. And normally I usually keep about 25% of 20. Well, let me change that. Anywhere from 10 to 25% of my portfolio into my company stock. Okay. And I'm going to start here. And ultimately what happens is with my retirement account, I have the option to move into index funds, several different index funds, or I can roll with company stock. Now, index funds, depending on which ones you have, like for example, I have a couple of Vanguard funds, which are phenomenal funds, the Fidelity large cap, and a few other Fidelity mid cap. And so for the most part, I ensure that I have 25% in each of the two Vanguard accounts that I have. And so 50% of my total portfolio is in two Vanguard accounts. And then I have some Fidelity large cap, and I have some Fidelity mid cap. And I also have a little bit of guaranteed interest and a little bit of the blended fund. Okay, but here is my company stock. And it starts from 2015 and goes all the way to 2019. Now, in 2015, December 31st, I had about roughly $149,000 worth of my company stock, and they paid out a 4% dividend. So for that year, 2015, I earned $6,000 in just dividend payments. All right, now 2016. And so what I did was I took a look at, in 2016, I held my company stock 4 quarters of the year, and so I received four payments. So for this video, what I did, I took the amount I had for the 4 quarters, I divided by 4, and pretty much gave an average, basically a guesstimate about how much I received in dividends. All right, so 2016, my company agreed to pay out 4% again, and I had on average 132 in 2000 and March. June I had 220. September I had 207,000. In December I had 199,000. So roughly around maybe 180. And so as a result of that, I received $7,590 in dividends. Okay, company increased the dividend payout to 4.2%. And so in 2017, I had 233,000, 251,000, 232,000, and 268,000. So I took those and I averaged it out, and on average, close to $10,400. So for the year 2017, I earned $10,400 in dividends. Okay, and I think that's a great way to earn some additional income. It's a great way to help build your portfolio. Now, what I like to do is I like to reinvest my dividends to continue growing my portfolio. Okay, now when I reinvest my dividends, it just buys additional company stock. All right, 2018, I think my company, they increased their dividend to 5.5%. And so in 2018, I had 266. I had 247. In September, I had 266. December, I had 227. And as a result of that, my dividend payout was $13,900. And so you divide that by 4. So roughly every quarter I received about a check for around $4,000 in dividends, which what I did was I just simply clicked the button to reinvest those dividends to help keep my portfolio growing. All right. And 2009, I don't have all 4 of them, but 2019, they increased the dividend rate to 7%, which was outstanding. And so for 2019, my dividend payout increased to $16,850. Okay, so when you take a look at this, this is an awesome way to grow a portfolio over time by consistently reinvesting your money into dividends. Now when it comes to my company stock, I kind of decreased the amount of money that I have in my company stock. Now I keep around $100,000 in my company stock, and this is the reason why. Now I may get 7% dividend reinvestments, but in my Vanguard accounts, they average 11-12% annual increase. Now right now I'm down 13% across the board in all my plays. But what would you rather have? If I start January with $100,000 and I have it in my company stock, they're going to pay me it's up to 8%, so they're going to pay me over $8,000 in dividends. But if I had $100 in Vanguard accounts and it grows by 12-13%, now I'm going to have a balance of $112,000. And so when you are looking at your retirement accounts, when you're looking at your brokerage accounts, these are the things you need to pay attention to. What is the annual percentage rate of growth of your index funds, of your stocks, and also your dividends, right? And so as I stated, as of right now, I keep $100,000 in my retirement account simply for dividend investing. I'm up to 8% now. And so again, I'm averaging, I'm up to 100,000 and the dividend payout is up to 8%. So as of right now, I receive $8,000 a year in dividends. And also I'm buying while the market is down. I'm buying, my index stocks, my index plays. I'm continuously buying a bunch of that in bulk. So when the market do return, I could expect 35% returns off of the bottom. And hopefully my index funds will heavily outweigh my dividend funds. But dividend funds are a great way to boost your portfolio. Okay, now I hope this video added some value to you. Now if it did, hey, please hit that like, hit the subscribe button. Keep coming back for more wealth building information. I hope all of your trades this week are successful ones. All right, peace.